Welcome back to another Millennial in Debt video, and welcome to day 7 of the 12 days of money. I have been having such a good time with this series, and I'm so happy that you all have been enjoying it. And it's really giving me the boost, the motivation, the invigorating, that's not a word. Invigorating me to really come on in 2025 and post the long form content that you all really want. We love reels, we love shorts, we love TikToks, RIP, wherever it lands in 2025. But we also love to take our time and actually learn how to do something. And long form content really is the only place that you can do that. So that means we are getting into a foolproof, step by step how to start investing, because you want to learn. And I have been hearing all different types of questions. So I want to have all that information in one place for you. So this is where we're going to be. All right, let's get right into it. So the first thing, if you want to get started investing and you want to start learning how to invest, I'm going to highly recommend that you open the account. All right, we're going to get into all the things about learning and information and knowledge, but you need to open the account. And that account is going to be different depending on where you are in your life. So if you have an employer that offers a 401k, a 403b, or a 457, you are going to reach out to HR or whichever department handles that setup, and you're going to open up that account. Starting with your employer sponsored plan is a great place to start and learn, because you don't have to do too much heavy lifting. All you have to do essentially is open up that account, pick how much you're going to contribute. That could be 3%, 5%. My suggestion and the rule of thumb you'll often hear around the internet is for you to contribute up until the max of what your employer may be offering as their match. That is the only guaranteed money that you will ever have in the stock market, is that match, where if you are investing $3,000 and your company says, hey, we're going to match and put in another $3,000, that is automatically a $3,000 gain that you didn't have to invest, and that is guaranteed. The only guarantee. Now, if your employer does not offer an investment account, or you already have your 401k open with them and you're like, okay, they kind of handle everything, but I really want to lean into learning how to invest more or investing more than just in my 401k, that is when I'm going to suggest a Roth IRA. If you make a certain amount of money, and that amount is going to change every year based off of what the IRS determines are the limits, you will not be able to invest in a Roth IRA. You still can, of course, invest in a backdoor Roth, which we will get into in day 8 of our 12 days of money. But you can also invest in a traditional IRA, which has no income cap. As of 2025, but it's also the same in 2024, which is the year you are watching this. Maybe you're watching this in the future. Well, hey. The cap for the Roth IRA, the cap for the traditional IRA, and the cap for the backdoor IRA is $7,000. If you are 50 years or older, you're going to have an additional $1,000 catch up, which means you'll be able to invest $8,000 a year. And if you already have an IRA, you already have a 401k, and you're just like, but I need to invest more, I want to learn more, and I don't want to have a cap, that's when you would open up your individual brokerage. But remember, we're on step 1. So all we've done right now is we've opened the account. So if we're going to use an analogy, which we are, to make it really simple for you to follow the steps in the process, when you think about opening the account, think about it as you are simply walking into a grocery store. You have not grocery shopped yet, which means you have not invested yet. You've not spent any money. All you've done is you've opened the account, right? So that is step 1. I specifically use Vanguard for my Roth IRA and individual brokerage. I also have an account with E-Trade. I've had a 401k with Fidelity, so I speak very highly of Fidelity as well. And then if you have a 403b or a 457, it's typically going to be, or a 401k essentially, it is typically going to be offered through a brokerage that your company is affiliated with or is working with. So if you're looking for a brokerage, do not spend a ton of time. Like I mentioned, Vanguard, Fidelity, E-Trade are all very good. Charles Schwab is another one that is really good, very well respected. Open the account, you have the brokerage ideas already. The second step, if you are just getting started and you want to really learn more about investing, is not that the account is open, you are going to contribute to the account. So like I mentioned, if you have a 401k or 403b, you're going to choose a specific percentage of your income to go into the account. That is you funding the account. So again, whether it's 3%, 5%, 7%, whatever percentage you choose of your income, that is your contribution. When you open up a Roth IRA or you open up an individual brokerage, you have to connect that account to your bank account and select how much money to put into the account. So again, we're sticking with our grocery shopping analogy. We've walked into the supermarket, but we want to make sure we have our wallet, right? Because we can't buy any groceries if we do not have our wallet. So contributing a specific amount into your account is like making sure or double checking that you have your wallet with you before you start picking up different groceries or before you start your investments. Step 3, after I have walked into that grocery store, I've opened the account. After I've checked my pockets that I have my wallet, I've contributed money, I funded the account. Now I'm going to start grocery shopping. Now I'm going to actually start the process of investing. And so a really, really easy place to start is a 3-fund portfolio. You do not need to make it really complicated, especially if you are in the learning process. A 3-fund portfolio is going to fully diversify and really have you covered so that you can see the growth as the market makes its gains and not have to worry about all the other intricacies that will come further down the line as you continue to learn. So what does a 3-fund account look like? What does that even mean? When we talk about investing for beginners, I always talk about buying index funds or ETFs. That makes it super, super simple. So when we're grocery shopping and we're going in and out of the aisles and we're picking things individually, you can think of that as picking individual stocks. So I might pick up a little bit of Apple, I might pick up a little bit of Walmart, I might pick up a little bit of Tesla, whatever it is, that is picking up individual items in the grocery store. I'm picking up individual stocks. And there's nothing wrong with that. However, one, it's a lot of work. And 2, it's a little more volatile than if you invest in index funds or if you invest in ETFs. When you think about an index fund or you think about an ETF, I want you to think about it as if you are buying an aisle in the supermarket, and without having to go and pick out individual items in that aisle, you actually get every item in the aisle for one price. So if we're in the fruit aisle, we'll compare that to the tech sector. The stock market has 11 sectors. Compare that to 11 aisles. So now I'm going to buy a tech index fund. So a tech index fund, or an example of a tech index fund, would be QQQ. So I buy that particular index fund, and now I'm getting all the tech companies in the tech sector of the stock market. So that makes it a lot less volatile, so that let's say Apple crashes and goes bankrupt, which is super unlikely, but let's say it happens. Let's say Apple goes bankrupt. Now I'm not losing all of my money because Apple crashed, because I still have every other tech company that may be doing really well, and I will still have gains. Does the stock market have volatility? Yes. Is there always going to be risk involved? Yes. But an index fund or an ETF really help to cushion you so that you don't have as much volatility as if you were picking individual stocks. But let's say you're just like, okay, well, how am I going to have a 3-stock fund if there are 11 sectors in the stock market and I want to diversify, I want to have a little bit of each sector? What do? Let me introduce you to the Total Stock Market Index Fund, or the Total Stock Market ETF, which gives you access to the entire stock market. So if you walk into a Target, you walk into a Whole Foods, you walk into a Trader Joe's, and you buy a Total Stock Market Index Fund, now you get the entire grocery store for one price. An example of a total stock market index fund, which is one of my favorites, is going to be VTI. VTI is going to give you exposure to all 11 sectors. It's going to give you exposure to every domestic stock, so every US-based company in the stock market. I highly suggest that a total stock market index fund is going to be one of your 3 funds in your new account. Now, the next piece is going to be a total bond fund. That is going to give you exposure to a ton of different types of bonds. So again, similar, you don't have to pick out specific different bonds, and you're getting a really structured or really diversified set of bonds without having to lean into a lot of the volatility, without having to lean into as much of the risk. And then the third fund that you are going to invest in is a total world fund. You get the picture, you see how we're doing? An example of a total world fund would be VT, and that is going to give you exposure to all the companies in the world, so that let's say a company in China or a company in Europe is doing really well, you will have exposure in your funds. Your portfolio will also do well. I typically like a nice 60% in a total stock market fund in the domestic sector. I like 20% in bonds, and then I like 20% in international. That could be a bit high for some people, so I do suggest, based off of your tolerance for risk, that you play around with the different percentages. You may want 70% in a total stock market fund, 10% in international total world fund, and 20% in a total bond fund. You want to set it up in a way that makes you feel comfortable, but you're still getting exposure to a really well-structured portfolio and a well-diversified portfolio by only buying 3 different funds. So if you have $100 to invest and you're just like, girl, what do I do? I've opened up the account. I understand total index funds. I understand I have $100. What do I do? This is the breakdown of if you have $100 to invest and you want to make sure you have a very diversified portfolio, but you're only investing in 3 different funds. Those 3 funds give you all the exposure you need, all the diversification you need. So now as we get into step 4, that is going to be where you're saying, okay, I've started, I'm in the game, I have time in the market with compounding, it's working for me. Now I can sit back and really learn all the details, all the intricacies that I may not know, I may not understand so well, but I'm already invested. That is how I reached Coast Fire. That is how I will reach FIRE before 65 years old. It's because at 22, when I was just starting off in my teaching career, I started investing 3% of my salary in a 403b. It amounted to about $121 a check, less than $3,000 a year into a 403b, and that has helped me grow my portfolio to over $300,000 in about 10 years. So time in the market is so crucial, is so vital, is so important, but if you take the time to just learn everything before you actually start, you are losing money, you are losing time. And this is why step 4, you want to get a book. I have a list, I'll put it in the description box, a list of books that you can lean into, that you can learn about investing, and a list of really great podcasts and social influencers, money experts that will help you learn more as you grow your money, as you grow your portfolio. And that is it. It is a 4-step, foolproof, I never know which is the right way, for you to get invested in the market without really wasting too much time, so you can actually start today. Today. All right. And I will see you in day 8 of the 12 days of money. Peace.